Hello, hello, everybody. We are live. We should be live. We're going to wait a couple minutes, let people come in. Good morning, JCB, Power Napster. Hi. Hello, hello, hello. Today is a day where the market has to choose. Are we going to continue from what we saw yesterday, which was overall pretty green day, very healthy day, very exciting, good day for pretty much the entire market. Bitcoin has plummeted, so we saw what the market chose. Not plummeted, but I mean it's not doing. I mean it went down to 39,000, highs 41,000. So we know it's not the best right now, but we're gonna see ultimately what the market chooses today. We're just waiting for people to come in. Hello, Victor. What's up? What's up? Vazduv, Hayamit, Samuel Main. Good morning. What's up? Thomas, you can finally make it. Hello. We are live on this red morning. We will see. Do we continue to be red? That is the question. So Bitcoin, as you can see right here, has dropped. It was at 42,590 yesterday, opening the morning. Pretty strong. I mean, if you look at this rise up. I mean, we went from 39 to 40, 42, up almost $3,000, about 7%, right back down. It's interesting, you know, what is going to be the catalyst? Because yesterday's rally really didn't have a catalyst, if you think about it. There was no significant development in Russia. It's not like we found a bunch of oil in the middle of Louisiana or anything. Like, is that, you know, there was no reason for yesterday to happen. So it is my belief that it was a dead cat bounce, but ultimately we will see what happens. Morning, morning, morning. Brian says, good morning. Just saw a vid from the Palantir conference. Looking forward to it. Yeah, that Palantir conference, guys. Oh, my goodness. That was an amazing conference. That was good. Like, that was, like, if you... I listened to it last night, and I slept like a baby. Like, it was really good. I'll give my thoughts on it a little bit later. Some preliminary thoughts with that. Sham, first of all, did a phenomenal job. He's the CEO. He's the COO of Palantir, Chief Operating Officer. And he got a lot of flack for Q3 earnings for not being that good, primarily because he just kept kind of regurgitating himself, kept saying the same stuff. But yesterday, I mean, the questions he was answering and the specificity of the analysis he was giving and the future growth trajectory he was also providing was just like really good. Like I felt awesome listening to him last night. It was good stuff. He said new video on Palantir developers channel. Let's look at that right now. I haven't actually been to that channel in a little bit. I don't know, just because I haven't checked it out. Palantir developer channel. They have 10 videos now. Wow. Yeah, I need to review these videos. I have not even seen any of these videos. They're putting out content. Wow. Pipeline monitoring. How to start monitoring data health in a Palantir Foundry.
Several applications require reliable pipelines. You may have built a production pipeline.
Interesting stuff. Hey, Mitch, just wanted to wish you and all those watching a good day in these crazy times. Much love. Thank you, Just Listen. Hope you have a great day as well. Good morning, people all around the metaverse. MNST, good morning. Nice shirt, Range Rover. Thank you. This is a nice shirt, right? It's not a horrible shirt. Sankar killed it. He addressed everything he needed to. Yeah, man, Sankar addressed... If you guys haven't seen the Supercut, go to Palantir Vision's channel. Listen to the Supercut. And he addressed pretty much everything from modularization to the ability for Palantir to work with the government. Look, the crazy thing is what he said about the government makes it really, really weird to accept what Kathy Wood has said about Palantir. Like if Kathy's argument is she sold because of the government, his argument around the government was that we're going to become the first software prime for the government. What does the first software prime mean? It means literally we would be the go-to choice for the government and the IT infrastructure that the government uses for other applications to be built upon within the institution. It quite literally sounded like the defense spending that is ramping up as of the past couple of weeks. A lot of it's going to Palantir. Let's just say that. So with Kathy's argument about the government, I mean, it feels like a really crappy reason. I mean, the main reason feels like she had to consolidate into Roku or whatever, but it did not feel like what she was saying made any sense in the context of what Palantir is doing. You're calling it now. Palantir will close down 2 to 4%. Palantir right now pre-market is at 1150. So it's down like a little bit in pre-market. It's down about 1.3%. Yeah, we're gonna see. She sounds awesome. Yeah, you guys want to watch this until market open? Let's watch this a little bit. Let's try to get a little bit of analysis of what's going on in the developer world.
But how can you ensure that it continues to run smoothly and in line with your expectations without having to manually check it every day or every hour or worse? Well, data health checks can automatically alert you when something goes wrong with your dataset or your pipeline. So there's no more waking up to an unexpected or unanticipated email from an end user who's looking at stale data, because now you'll be immediately notified as to when and where something goes wrong. When thinking about the health of a dataset or pipeline, there are many factors that come into play. Examples include, did the recent build succeed? When was the last time it was updated? If it's an ontology backing dataset, you may also need to think about whether the sync succeeded and did it do so in an expected time frame. And there are many, many more. Now, if we were to brute force this process, we could do things such as manually inspecting the build history, looking at the contents of the dataset, the dates, etc. But instead, we can avoid this process entirely by relying on these checks automatically evaluating. So, let's jump onto Foundry and have a look at what this looks like on one of the datasets that you may have seen in a previous video.
She's about to jump into Foundry, and for those of us who have not fully seen Foundry yet, you know, it's really interesting to kind of go into it and take a look.
Called flights. Now, here we are looking at the flights dataset. On the left pane, I can already see a section titled Health Checks. From here, I can see an overview of the health checks on this dataset, which include answers to some of the questions I asked a few minutes ago. Now, I can already see that something is wrong, indicated by the critical failure on the time since last updated check. So for additional clarity, let's click View Details to see more about this. From there, we've been brought to the Health tab on the dataset, which gives us a more detailed breakdown of the dataset's health. So now not only can I see the current health status, but also indicators representing the historical health of this dataset, allowing for better traceability and root causing. So normally a dataset critically alerting after 133 days of staleness would lead me to drop absolutely everything to fix it. But in this case, we're just looking at a training pipeline that hasn't been modified in a while, so I'll at least finish off this video before doing something about it. But if we
That was a funny joke, kind of.
look into the configuration of this check, I can actually see that this alert started firing after 7 days in a moderate fashion, and then it escalated to critical after 9 days. So if this was in fact a production pipeline, we definitely would have done something about it by now. So now that you know what a health check looks like, let's add our own on a clean version of this dataset. Here at the bottom, we can see a health check helper, which shows the different categories of checks that we can add to our data.
All right, I'll end that now. You guys can watch it. This, for those who are asking, this is the Palantir pipeline monitoring, how to start monitoring data health in Palantir Foundry on the Palantir developer channel. I'm going to subscribe to them right now so I get notified when they have. I'll turn on the notification bell too. Boom. Every time they release a video, I'll know about it. This is an interesting channel. I haven't fully gone through it, but for those of us who want to understand a more technical analysis of Palantir, I mean, this channel seems to have a pretty good way to understand this. A lot of you guys are saying she's hot. No comment. I am a professional news broadcaster for the market. I don't speak to attractiveness. But yeah, she is hot. Here is the cowbell. This cowbell will ring at 9:30. Everyone should be ready because when it rings, it will ring and it will signal that the stock market is indeed open. Until then, we are looking at Bitcoin. Interesting stuff, guys. Interesting stuff. Interesting stuff. We are going to see what happens. Let's go to CNBC real quick. Let's see what's going on in CNBC. Dow futures fell 400 points. Oh, yes, that's the one thing I forgot to mention in the morning. So there were talks between Russia and Ukraine. There were like high-level negotiations that were talked about. And, yeah, they fell through. They fell through. I got this notification, I think, at like 3 a.m. or something. The WTI is down at $1,112, and Brent crude is at $116. So yeah, there's not anything. There wasn't anything good, right? That's why the Dow rose more than 1,650 points. It dropped another couple hundred after these dropped. Wait, did we get CPI data today? Did we get CPI data? I feel like we did, right? Ah, yes. Here we go. How did I forget about that today? Yes, CPI data. Greetings from Toronto. What's up, what's up, what's up? Inflation climbs to 7.9%, a new 4-decade high. Boom. We have inflation data. The consumer price index inflation has been boosted by gas prices, but also by increases across a wide variety of products and services. So let's read this for a couple minutes before we get into the market open. Prices increased 7.9% in the year through February, the fastest pace of inflation in 40 years, as gas prices increased and a wide array of goods and services grew more expensive. The rising cost of gas, food, and rent all contributed to the increase, the Bureau of Labor Statistics said. Rapidly climbing prices have hit consumers in the pocketbook, causing confidence to fall and stretching household budgets. Rising wages and savings amassed during the pandemic have helped families continue spending despite rising prices, but the burden is falling intensely on lower-income households. That is very, very true. So this is a graph of inflation if we look at it. 1980, we were at 14%. That was the end of the 70s. It was getting pretty bad. 1974, it also got to 12%. And then here, I mean, in 2010, we had negative inflation because of the recession. You know, things got really good, and now we're up at 7.9%. The price burst represents a challenge for the White House, especially when November's midterm elections are fast approaching, and sanctions and other economic pressures on Russia are not going to help gas prices. That is also true. The quickest inflation in most Americans' lifetime is also a problem for the Federal Reserve, which is in charge of achieving price stability. The central bank has signaled it will raise interest rates by a 0.25 percentage point this month. That's definitely happening. By reducing the consumption and slowing of the labor market, the Fed is able to take some pressure off inflation. Yeah, I mean, the question is, can they reduce inflation? I mean, can they reduce consumption? The labor market is primarily, guys, why we've not had a recession yet, because there are so many jobs. There's so much demand for jobs. So if you want to get a job, it's one of the great, it's crazy because the market's bad right now, but it's the craziest market or it's the best market in the world to actually get a job, you know? So it's just it's kind of wild right now that that's actually what's happening. But there it is. CPI data, 7.9%. There we go. Inflation is 7.9%. It is official. It is absolutely official. I mean, we expected that to happen. So that did happen. Here's some price actions. Hotels are up 29%, furniture 17%, baby food 8.4%, toys 6.7%, new cars. I'm happy I bought my car in 2019 because a new car today is not the easiest. Used cars up 41% year over year, gas 38%. Yeah, it's rough. It is absolutely rough. People said, "Bro, how did you forget that?" I don't know. I just woke up and I was just like, "What is going on?" It was on my mind last night, but I guess I woke up and I didn't see it. All right, well, we'll talk about that more in a second. We have 1 minute until market open. We're going to see what this chart looks like, and you guys will hear the famous Amit market open bell. It is ready to go. It is waiting to ring once we hit. You ever know why it's 9:30? I never knew why it's 9:30. Why isn't it 9:25? It's just... Or why isn't it 9? 9:30. And why is it not 4:30? Why is it 4? There has to be some logic behind it. I don't think it's totally arbitrary. But there has to be some logic there. We're going to see how green and red this goes. 9:30, market open. The market has opened. All right. So we see some red. I see more red than more green. S&P's down. S&P is down 1%. Let's go to Palantir. Where are you at, Palantir? Palantir's down about 2%. Red candle forming right there, 1147. Okay. Palantir got to like 1180 yesterday. So it's holding up, but it's definitely down. Coinbase 172. Coinbase is still red. Bitcoin's obviously red. Tesla. Hey, I said this. I predicted Tesla would not stay under 800. Like when it got to 780, I was like, there's no way. This dropped into 830 the next morning. Boom, 830 in like 20 minutes. Tesla's one of those stocks that's it's hard for it to get really below, I would say 770. Like we haven't seen that yet. Because Tesla is Tesla. Tesla is Tesla. What did you think of the Palantir meeting with Morgan last night? They didn't say they're done with the SPACs. They just said that out of the 30 new net customers they got in 2021 Q4, none of them were SPACs. So that was a good sign because that means they recruited all customers that were not SPACs. I will give my thoughts on that in a video coming out later today, so definitely watch out for that video. I thought the conference was amazing. I mean, I thought Shankar really killed it. He did an amazing job talking about it. Google, guys, Google. Oh, also, first of all, let me give my thoughts on Google. Google's becoming really attractive to me. I mean, I'm like, I want to buy 2 shares of Google. It'll become 40 shares by the time it splits. Like, I'm really liking Google. But Amazon, here's the big dude. Amazon did a 20-for-1 split yesterday. Okay, for those who don't know what that means they take the stock price and they split it by 20. So the share price gets smaller. So let's say right now their stock price is at $2,086. If we take $2,086 divided by 20, that means their stock price in June when this gets approved would be around $145. So obviously for a retail investor, it makes no difference in the price, right? Because it's the same price, it's just smaller. So there's 20 times more shares, which means that if the price is 20 times smaller, the market cap or the intrinsic valuation fundamentally does not change. But from a retail investor perspective, and I'm guilty of this myself, Amazon looks way more attractive at 140 than it does at 3,000. Just like Tesla looked really attractive at like 500 versus 2,500 because they did a 5-to-1 split. So, I mean, it's something to think about. Now, Amazon ran up around 8% last night. So they went from, let's look at it right here. Let's look at it on the 1 day. That's better. Yeah, so they were here last night around 2,700, right? And they did this run up to 2,900, so almost 200 points. Now the question is, will the market sustain this? They also issued a buyback program. A buyback program, it means that they are buying back around $10 billion of their stock. So they're going to reduce the outstanding share count by $10 billion, which divided by 3,000 is some couple million shares, or maybe 100 million shares. I'll do the math on that later. But that's important because that means the value of shareholder shares will increase because there will be less outstanding shares in the market. So, for example, if Palantir did a buyback, our shares would naturally go higher because there would be less of those shares, which means if, basic supply and demand, if you have something that there is less of, the demand goes up, which means the price goes up. The question is, will the market reward Amazon and keep this price action that they gave them? Or will the market, with inflation and everything that's going on, will the market just not respect it? That is the question. That is the fundamental question. Feels like Palantir can never have 2 days in a row. Yeah, I mean, it's kind of hard for Palantir to have those coveted 2 days in a row. But I think that's the whole market, right? Like, if Palantir is red, usually the entire market is red. It's just kind of the way it looks like. Let's look at some of their SPACs. Big Bear at $8. I think it ran up to, yeah, I mean, it's holding up pretty well at $8. Wejo's been stuck at $3. I'll be doing an interview with the CEO of Wejo, guys, a little bit later this month. So let me know if you guys have any questions for him. He's an interesting guy. I'm going to explicitly be asking him about Tesla, if they compete with Tesla. And I'm going to be asking him around, like, why does he like Palantir? Like, why is there such a good partnership with Palantir? Owen says, I'm 100% cash now after crowd profits. Congratulations, Owen. Maybe you can send super chats now without, ruining your bank account. Victor says Amazon is overdue for a run. They kept bouncing from 3K to 3.5 for almost a year, dipping around 2. I think they should be around 4K by now. Fair value. Yeah, I agree. I mean, most analysts also say Amazon should be around 4K. I think Amazon and Google are a good buy right now, if I'm going to be honest. Like, when we start rallying, Google, we've seen, has the ability to go to 3. Like, I'm really considering buying Google because I'm just like, in terms of growth, I just don't see why Google loses. Like, it's kind of hard for me to figure out. Like, Facebook, it's pretty obvious. Google, I don't know. It's hard to figure out why Google loses. And same thing with Amazon. So it's like, I don't know. It's hard to deny it. Black Sky's getting murdered. Yeah, Black Sky's getting destroyed. Black Sky is absolutely getting destroyed. I don't know why it's getting destroyed, but you know, and that's what I'm saying. When people say should I invest in the SPACs, my argument is like probably not. Like, I haven't bought any of the SPACs because, and it's not that you can't buy the SPACs. It's just I don't know how much potential the SPACs have over Palantir, which is basically like an ETF that has exposure to the SPACs. Babylon earnings came out. Let's look at that. Babylon earnings. Babylon Health earnings. Okay, let's look. This is a Palantir SPAC, guys. Babylon delivers four-fold revenue growth in 2021. Wow, revenue went up 400%, and on track to meet threefold 2022 revenue growth up to $1 billion. Let's look at their chart before we read into that. That's really good. Is this it? Babylon Holdings? Let me make sure it's correct. Babylon Health Stock. BBLN, yes. Okay, so we are... It's pretty flat. Yeah, it's pretty flat. I mean, nothing really changed. Okay, so earnings didn't really push it up. But overall, not bad. So let's read through this. Monthly revenue in January 2022 exceeded 80 million. 2021 revenue grew 4 times year over year. So they increased revenue by 400% as a public company. That's not bad. Guidance for 2022 revenue grew to, again, almost another 3 times to 900 million to 1 billion. So they're saying in 2022 we're going to do $1 billion. For context, Palantir did 1.5 billion in revenue in 2021. So listen to the SPAC that they invested in is going to do $1 billion in revenue, and Palantir the company did 1.5 billion in revenue. I mean, like, for those who are saying the SPACs are bad, it's just like, what story are you reading? Like, okay, in 2021, Babylon remained one of the fastest growing digital health companies, delivering a revenue increase of over 4 times compared to, wow, I'm surprised the stock price is not going up harder on this. This is like really good. This is phenomenal. Babylon delivered another strong year in 2021. They're trying to focus on target profitability. So total revenue was 119 million last quarter. Grew 279%. Loss was about 230. So they're not profitable. So that's the main reason they're not growing at that level. So that makes sense as a growth company, losing profits right now in order to get market share. At the beginning of 2022, we added over 100,000 new US VBC members. Interesting. And they're mainly a company that works in the UK as well. That's where their main work is. Not bad. Not bad at all. That's some good stuff for this Palantir SPAC. Someone said they can't hear sound. I'm pretty sure. Yeah, I think that's just you. Yeah, that would be just you, Hank. When I mentioned the SPACs earlier, I meant that Palantir is not going to be taking on new SPACs from what I understood last night. Yes. Now, I don't know if he officially said they're not taking on new SPACs. I'll listen to it again, but that might be. Palantir SPACs have been slow blown out of proportion, Jacob. Yeah, like, it's kind of insane. It's like, I have no idea what's going on with this argument. It's just, I guess someone on CNBC says it and, you know, colludes with the host for a layup for this question, and then they dunk it. It's just like, but the SPACs are doing really well. Like, and it makes sense. They didn't invest in crappy companies. They invested in companies that have a chance to actually win. So I don't see why that would be happening. So let's talk a little bit more about inflation. Let's look at what CNBC is saying today about inflation and kind of discuss a little bit more. This is interesting. 7.9%. The question is ultimately, is this going to be something that should scare people, or is this going to be something that keeps you going? So let's take a look at this video.
The February release of CPI Consumer Price Index, of course, is going to be huge. The month-over-month number, as expected, up 0.8%. The high water mark here was actually up 0.9. So we have a bit of a reprieve there. If you strip out the all-important food and energy, exactly as expected, up 0.5. That also has had a high water mark of up 0.9. That was all the way back in April of last year. Now we get to the money numbers year over year. As expected, it's 7.9% for year-over-year inflation, following 7.5 that could get revised. 7.9, we go to the Wayback Machine to find a higher level of inflation. You're looking at 8.4% in June of 82 as your comp, and on the year-over-year ex-food and energy, known as core, exactly as expected, up 6.4%. Of course, 6%'s in the rearview mirror. That still may get revised. 6.4%, well, that comps to the same as the 6%, 1982, August of 82, when it was 7.1%. Now, on initial jobless claims, we're expecting a number right around 217,000. Well, 227,000 is the number from a slightly revised 216,000, so it's up 11,000. Remember, the post-COVID low going all the way back into those wild 60s was 188,000. That was back in December, I believe the first week in December. And finally, continuing claims, always a week in arrears. This is February 26. 1,494,000, and that sequentially follows a slightly revised 1,469,000. The low water mark there was a couple weeks ago at 1,474,000. So these are good numbers. Maybe continuing claims isn't as good or initial claims, but they're still very good numbers. The big news obviously continues to be the push and pull of geopolitics into a treasury market, much more, at least price-wise and statistically concerned with what's going to happen on March 16th, the upcoming beginning of a tight.
All right. Interesting stuff. Now, here's the thing I want to really talk about. This is the technology opportunity. So inflation's up 7.9%. The question becomes, if inflation is up 7.9%, where are you going to put your money that is going to be able to get you a return? Because your money is losing 8% of its value, okay? So where are you going to put your money that's going to get you a return? Dan Niles is a big guy in the technology sector who makes really, really interesting comments around Apple, Google, Facebook, etc. Let's hear out his thoughts on what he thinks where the buying opportunities are, and then we'll talk more.
Some of the biggest names in technology are down at least 40% so far this year, prompting the question, is now the time to get in? PayPal, Netflix, Meta, and Zoom are just some of the industry giants feeling the pain. Joining us right now is Dan Niles. He's the founder and senior portfolio manager at Satori Fund. And Dan, what do you think? Is this the time? I know you had some concerns before, but has there been enough pain to make you think, okay, these levels I would try?
So he's gonna answer if he should start investing in some, or if people should start investing in some of the big cap tech names. So this is if you want to get a large cap tech exposure.
Sure, I think it's a combination answer. So I think number one, our big picture still remains the S&P is down 20% at least peak to trough this year, and we're not there yet. The Fed hasn't started raising rates. They haven't started working down their balance sheet. And quite honestly, we haven't seen estimates come lower based on what's happened recently with the Russia escalation in the Ukraine. Having said that, I think if you are willing to trade around names as well as have shorts on to protect yourself to the ultimate downside, I think it's actually a pretty interesting time. I mean, this over the last 2 weeks on this latest move down in the market, we did in fact step into some of those names that are down 60 to 80% in the fintech space, for example, where we bought names like Square. We've got 4 different names in that space. We're taking a hard look at PayPal, for example, in the payments area. But don't forget, a lot of those names
PayPal's down under $100. PayPal is the interesting one.
Are down a lot because they were pandemic beneficiaries, like PayPal, where you had online payments, or Zoom, where you had video conferencing, or in e-commerce. I mean, we saw what Stitch Fix had to say last night, where these names are getting crushed because they were up a lot based on the pandemic and people staying at home and Zooming and, you know, sitting on their Peloton bikes and streaming things on Netflix. But each one of these is a little different. And so I think you have to go through them one by one. But yes, I do think you should start looking at the better names in the group that are gaining share, that are growing quickly, like in payments, for example, or online lending, and start picking away at that. We've also bought some solar related names over this.
So that makes a lot of sense. That's his overall thoughts. I mean, the core argument he's making here is that a lot of the pandemic tech stocks are getting destroyed because of the fact that the pandemic's over, right? So if the pandemic's over, there's no real reason to continue to buy these stocks. But other major tech stocks that are down only because of them being down, not because of the pandemic. So something like a PayPal, right? There's no reason for the pandemic to have helped PayPal. In fact, it only should have worsened PayPal because people are making less payments. The stimulus checks obviously help them, but PayPal is not like Zoom, right? The pandemic is not an intrinsic driver of growth to PayPal. The pandemic is an intrinsic driver of growth to something like Zoom because people are staying at home more and they're Zooming. So these are where he sees like undervalued opportunities, right? So if we go to the PayPal charts right now, and I've been thinking a lot more about PayPal, to be honest, because it's starting to be a little ridiculous being this low. Like $97. It's like, what is going on? Now at the pandemic, let's look at the 5-year. Pandemic, we were at 94 was the low, or 83 was the lowest. That was March 13th, 2020. I think that was when Trump came out and like said, "Hey guys, we got an issue here. It's kind of bad." And then we're at almost approaching that same level, right? So this is what happened in that full year. Right there. Now the question becomes, is it worth significantly more than it was worth in that pandemic? And that is the question that I think investors have to ask themselves when they figure out, or when they think if PayPal is a buy at this price this low. Palantir is rocketing. Hold on, let's go to Palantir. Let's check out their price. 1160. Yeah, I mean it's staying there at 1160. That's important. You know, given it's a growth stock, it's not going to have crazy day-to-day movement, especially if the market is down. It's going to take a major catalyst, but we will see long term ultimately what happens when it does have its rip. And if it's, it's kind of like an Amazon catalyst. For Amazon to get up those 200 points, they needed to do something. It's going to be the same thing with Palantir. Dr. Z, thank you for the super chat. $2. Amit, keep stunning on them. Really, really appreciate you. Robert, you bought 2,000 Palantirs at $23, so you're waiting. Yeah, I think a lot of us. Comment your average cost on Palantir. Mine's is 20. I think most of us are waiting. Like, I tried to go down, but it's like I brought it down to 20, so it's like I really can't do any more at this point. Now I'm just waiting. Someone asked about Airbnb. Look, Airbnb is an interesting stock to me. 5 years from now, I see Airbnb doing very well. Like it's providing homes for refugees right now in Ukraine, right? Like it's hard to kind of not like the company. I think, and I don't see Airbnb having a competitor either. I haven't initiated a position because I think I need to know a lot more about the financials of the company. But like from a macro level growth story, what competition does Airbnb have? Like hotels are not like if you're booking a trip right now, you go to Airbnb first, right? Maybe you don't like the prices you get, but you go to Airbnb, you go. Tom Nash, hello, you're in the chat. Your average, you said, is $39.05. So Tom, that means you bought Palantir. I see Sachin in the chat as well. Hello, Sachin. That means you bought Palantir at you bought Palantir when Wall Street Bets was doing its thing. Tom bought Palantir right here. This is when Tom bought it. Everything Money, guys? He's the clown that Everything Money is talking about. He's the clown that Everything Money is talking about. The losers that bought it at 45. Everything Money is explicitly talking about Tom Nash. That's what they're talking. Amit, did you see what Watch Me Pop wrote above? Below is what he wrote. Palantir are saying the Morgan Stanley hinted Palantir won the U.S. Army title. So I heard of that. Again, I'm gonna do my reaction video to what Sankar said. If they won the Army Titan contract, they're gonna they're gonna have to release a press release on that. Now, if there's some hints in that call, maybe, but I have to check. Airbnb competition is hotels, isn't it? It's not really like I don't know. To me, hotels don't like. Yes, hotels are a big competition. It's just in terms of a pure platform for booking places to stay. I don't see Airbnb having competition. Sachin says, if you see the assets on the balance sheet on large hotel chains, Airbnb literally has none. It's best for volatile times. Yeah, that's the other thing. Like, that's the biggest point. I'm so happy Sachin said that. Airbnb doesn't have, like things on their, they don't own hotel buildings. They're a technology platform. This is the nature of technology. The reason technology is so deflationary is because it allows users, which is like content creators or people who drive their own cars, right? Or people that rent out their own house. User-generated control using the technology as a middleman is the technological revolution that we're currently in. Uber lets you make your car into a money-making machine. Airbnb lets you make your house. YouTube lets your content, your camera turn into a money printing machine. So like the beauty of technology is that if it allows creators, and creators, not just content creators, but any type of creative person to be able to leverage the technology to make money, and the technology just takes a percentage of that, I think that's the most symbiotic business model that exists in all of history. That's one of the most greatest opportunities for mankind. So when, and from a balance sheet perspective, Airbnb, Uber, they don't own cars. They're not a taxi company. They're not a hotel company. They create phenomenal software that allows people to get the job done. This is why it's one of the greatest moments to be alive. This is why when people complain about the world that we're living in, you've got to remember how amazing technology is. And I think that's one of the unique reasons that it gets me excited to even think about this stuff. Palantir went green when Tom joined the chat. Yeah, Tom, you gotta you gotta stay on. We're at 1170 on Palantir, guys. Not too bad. Nice green candle right there. Palantir's been doing well for the morning. Why is my Palantir average cost keep going up? Mother lover, I didn't buy in 2 minutes. Owen loves you, Tom. He's part of my Discord. He says Tom is my favorite YouTuber. But granted, he says Kevin was his favorite. Owen's a little bit of a WHORE when it comes to YouTubers. He finds what's popular in the moment and says what he wants. So, but he does love you. What Sankar said today, I'm surprised Wall Street didn't cover it. Yeah, I mean, Sankar said some good stuff. I know you guys keep talking about it. I will get into in my video. I'm not talking about it right now because there's just a lot to break down. Well, actually, why don't we listen to a little bit of the part that I wanted to break down? You might as well do that. Shout out to Palantir Vision for the supercut. Did a great job cutting up this talk. We're gonna listen to the parts I wanted to get you to listen to, or I wanted to hear. So one of them was the Gotham part, okay? That one. So let's listen to government, and then let's listen from 1645, and I'll pause in between and give some analysis. And this is really important because the reason Kathy pulled out was because of this government stuff, right? So like, if that's the case, then maybe I think that's kind of the reason. That also the analyst that interviewed him, he's the same person who raised the price target. He literally says in this interview, I raised the price target off the backs of the fact that the government business was improving, but it wasn't like the budget hasn't come out. And I believe that Palantir will be like the IT infrastructure underneath the foundational element of the governmental business. He's the guy who Sankar is talking to that raised the price from 11 to 16. So it makes sense that they're at this conference and they're having a conversation as well. Sachin said he dropped so many bombs and what go-to-market is looking like. Yeah, he dropped a lot of bombs. Like, it was good stuff. It was really, really good stuff. Joy Luna says Tom is annoying. My haters can kiss my Lada. Yes. By the way, guys, I don't know if you saw, Tom has a Lada car. We're going to go to his Twitter right now. Oh, I clicked on Tom Hanks. Sorry, Tom Nash. I clicked on Tom Hanks. Tom Nash... He tweeted something about the Lada. I responded to it. Here we go. This is from the Kyiv Independent Wall Street Journal. Iconic Russian car manufacturer Lada halts production. Due to Western sanctions, the company was forced to halt operations as it cannot source the necessary parts and supplies. So Tom's Lada is gone. It is officially gone. Why is Steve Nash's cousin in the chat? Owen says what hasn't changed is Amit is at the bottom of my list. All right, Owen. Got it. All right, so let's listen to some of the stuff off what he said.
The government side of the equation is one that I've always been very optimistic about and very positive on. And I think to a certain extent, I think investors overlook your positioning there, right? Can you talk to us about almost like the concept of lighthouse accounts and how that occurs in the federal government, particularly the U.S. federal government, and sort of the permission it gives you to sort of spread out into additional agencies and do more.
So he's asking straight up, look, I like the government stuff. Can you clarify what's going on in the government? How are you guys going to be able to grow this governmental business?
You have this interesting dynamic in government where, I think in the commercial world, largely it's all competitive.
Yes.
In government, these agencies are kind of, because naturally as humans we're competitive, but they're fundamentally cooperative as well. And so if you have immense network effects as a result. And so when we are able to solve some of these very hard problems under incredible timelines, it sets the standard for what is the requirement that the acquisition executives across services, across different agencies, even if we've done this project in one place, are going to be converging on and going after. So I think it plays to a lot of our strengths and our ability to invest outside of the government's own expectation or vision of what can be done. And I think we seize those opportunities really well. If you look at how much product that we've created since the listing, we have our Edge AI capability, which did not exist at the listing. That's going to be launched into a hardware bus of a satellite this month in space.
Notice he said Edge AI was not available in when they DPO'd. So the Edge AI that's going to get launched into space and used on a meta constellation level to help the government understand geospatial intelligence was not priced into the DPO. And they're trading at prices of the DPO. This is why it's just like, this is a ridiculous opportunity right now.
The work that we've done with Meta Constellation, we were really, obviously we had no knowledge of what's going on in Ukraine, but it is being used in anger by multiple Western allied services to really observe and take space from an intelligence domain where you're looking.
He's explicitly talking about Ukraine and Russia and saying how Meta Constellation, I did a video on this a while ago, which is where they have satellites in the sky, they have IoT connected devices, and they're giving data in real time via the Foundry software or the Gotham software into businesses and governments to be able to understand what's going on in space. Obviously, the Russia-Ukraine stuff is very important to have geospatial intelligence for what's going on.
At what's happening every week to how can I use this in a real-time decision-making sort of basis? How do I pair the imagery I'm getting from space with my AI models to drive my common operating picture? How does that feed into Gotham in terms of how I'm then running operations? So it's been really exciting to see that. And we've also seen a lot of acceleration based on these sorts of exigent events. The work that we did with CD2, I mean, that Army program was designed for a land war with Russia. And when the moment came, it was ready to be used. Like, okay, where can these tanks go? What's the restricted terrain? Based on the elevation? What's navigable? How long will it take them to get there? How do we help plan around these things? And really, in so many different dimensions, we were there to meet the moment, and that's really exciting. It's obviously exciting from a mission perspective. It's what we get up and.
We were there to meet the moment. He's talking. I listened to this part last night, and I was so happy. He was like, this is why we get up as engineers in the morning to do stuff, right? That's the nature of this.
And are excited about working on as engineers, but it catalyzes the growth of the business. It doesn't show up in a quarter, but it creates all these tentacles. It defines what good looks like, whether you're the Air Force or the Army or the Marines, and it starts informing the acquisition philosophy. And in our case, this is commercial product that exists. It's not something you have to go build 2 years from now. You could get it tomorrow.
Right. Got it.
So a couple things there. He says, one, it's a commercial product that exists. You don't have to build it 2 years from now. That's why they spent so much time building product. And number two, he's basically saying that, like, look, given that this stuff is instituted within the government, there is a more friendlier versus competitive adversarial understanding of how Palantir's governmental business operates. And this is the reason why this analyst ultimately raised the target price back then. Let's hear what he said a little bit about SPACs, and we'll listen to that as well.
Done nearly $400 million in strategic investments this year, and a lot through SPACs, and those strategic investments contributing nearly $50 million in revenues. And trying to understand sort of the vision and the philosophy behind that. And from a high-level view, it doesn't seem too different from when we hear Snowflake Ventures, and they want to sort of invest in.
So he's asking about how Snowflake also invests in other companies. What is Palantir's relationship with their strategic investments?
Early-stage companies to build upon their platform, or I was talking to Databricks today, and they have a similar kind of initiative going forward. Is that the similar ilk in terms of what you guys are trying to do with these strategic investments?
Yeah, let's talk about what is strategic about this strategic investment program. And so I think the business, the aspiration, like what is the highest potential use of Foundry? And I think it's application development infrastructure. It should be where you go to build the applications of the future, not AWS, not Azure.
Boom. Application development infrastructure. He explicitly says you shouldn't be using AWS or Azure. You should be, in the future, using Foundry to build your applications on top of, which is sort of the relationship that they have with SPACs. Well, those SPACs are all using Foundry to build on top of their platforms.
Like, these things are great and they're fine and they work, but they're rather highly unopinionated. If you're going to go build something like Skywise, which is the aviation ecosystem that Airbus built on top of Foundry, it has 160 airlines that run their operations on this software. It's integrated with their top 15 suppliers, and it generates over $3 billion worth of value for them a year. You know, we started working on...
Did you hear that? Skywise provides massive value, 150 suppliers. I mean, like 300 different airlines. They're all using this software that is built on top. That is the difference between Foundry and a lot of other software today. That's the difference between Databricks. That's the difference between Snowflake. People are building ecosystems on top of Foundry because Foundry is the foundational element by which you can build your ecosystem on top of. And like, that's the reason why they invested in these SPACs in the first place, because they saw these SPACs and they're like, hey, these guys, some of them are going to do really well. If they build their stuff on top of us, it's a use case for why Foundry is the next evolution of what could be a platform application development infrastructure.
On Skywise, 2 years after Boeing and Microsoft announced their own aviation ecosystem, which is nowhere. And then it's not because Microsoft's tech doesn't work. It does work. It's because most of the hard work is in front of you. You know, just saying that you're going to use this storage and this compute is not how you get to value. There's so much risk and execution that's left for these companies. So what's strategic about it is, like, we have invested so much opinion. If you are building applications that require you to integrate disparate data to generate like business logic and decision-making interfaces for normal human beings, I don't know how you could do better than starting and building on top of Foundry there. And so I am so excited to work with all my customers who have supply chain problems or want to work on pricing or integration in production, but that's not the strategic investment program. The strategic part of this is Foundry is our AWS. And finding that, it really pushes us in both ways. Like, we have accomplished so much in terms of what our product can do in that category. We've also been able to partner with companies to bring the cutting edge technology we first created in government around edge AI and bring that to the commercial world. There's clearly, if you're building autonomous vehicles, you're generating about 10 terabytes of data an hour on the vehicle. It is completely cost prohibitive to bring all that data to the cloud. So you need to do the AI edge inferencing, the data analytics.
That's a good point, guys. If you're creating 10 gigabytes of data an hour on an autonomous vehicle, storing that in the cloud, even though storage is cheap, if you're talking about every hour, that's not a good idea, right? That's, for those who are confused about what Edge AI does, that's what Edge AI does. It allows you to not have to sync your data to the cloud, but rather keep it on device because of IoT, Internet of Things connected data, or connected vehicles, or connected items that transmit data.
Analytics at the edge. And so being able to have the right sort of partnerships to transition that and expand the surface area of what our platforms do is incredibly valuable.
On a go-forward basis, should investors think about, should investors expect a similar kind of level of strategic investment on a go-forward basis in those programs?
I think we're still going to do strategic things. I'm not, like, the SPAC market doesn't exist anymore. It's going to manifest in different ways and won't always involve putting capital to work in quite the same way. But, like, we're deeply committed to being the infrastructure that people build their business on top of. And that will manifest in many ways. I think you should expect the SPAC program to basically peak now. Of the 30 some odd customers we added in Q4, 0 were SPACs.
Got it.
Yeah, interesting stuff. I mean, I'll do my video a little bit later coming out on my thoughts on this, but man, this was one of the this was better. This might have been better than Karp's interview with Kevin Warsh. Because Karp's interview was more philosophical, you know, and I guess he was like predicting this whole chaotic world that was happening. That was good. But this stuff was the nitty gritty meats and bones of like what's going on with the business. And you know, both interviews had their own lights, but this one was really interesting for me to listen to. Palantir back red. Did Tom leave the chat? Someone message him to rejoin. Where's Palantir right now? Let's look at it. You know, I know we followed on the day to day, but sometimes, well, no, Palantir's at 1170. It's not too bad. I was expecting like 1130, 1140. That's where we open in the morning. Let's look at the 5-day. Yeah, so we dropped to 1130 today morning, and now we're up to 1170. So we're up, you know, a little bit over 1%. Internet traffic would grow exponentially without Edge AI unloading all that data transfer across large distances, adding latency and risking bottlenecks. Yeah, I mean, that could be a good point as well, that could happen. 10 terabytes, yeah, not gigabytes, terabytes, my bad. It's a lot of data. Very detailed and easy to understand can be difficult because some of this requires a baseline knowledge of how systems works. This is why some folks think Palantir competes with GBQ and other think C3. That's a good point, Sean. I believe he's responding to Robert in the chat. Robert says, I would love to see a very detailed, easy to understand example of Foundry work. Yeah, I think that's the one thing we all have to get clear on, guys. This is a B2B enterprise software that leverages Edge AI. It's not the simplest thing in the world. Now, I think the philosophical explanation of data, disparate, make sense of it for business intelligence, that stuff makes a lot of sense. And it should make a lot of sense to any, basic investor that's trying to understand more about companies and their value proposition. But the actual tech of Foundry, it's not the easiest to understand because you have to have a baseline understanding of how these systems work. And if you're not a technical person like myself, I'm not a coder, it's not the easiest to understand. However, the Palantir Foundry Developers channel, I think you should go to that, Robert. I mean, I looked at that a little bit later, like 30 minutes ago. It's a really good channel, and it shows the actual software being used if your concern is you want to see the software. I'm here, chill, you headless chicken. Thank you, Tom, because without you, we would be at $10 right now. We need another prediction, Tom, because your predictions, we get the opposite of them. So CrowdStrike, let's look at Owen's favorite, 194. CrowdStrike did phenomenal yesterday on their earnings, increased guidance. They were at 169, now 194. Owen, I believe, sold out of them. So Owen took his like $3 profit because he buys like fractional shares or whatever. But nonetheless, it's good. This presentation is much easier to understand comparing to Carp. Yeah, Penny brings up a good point. Like Sham, for all of his flack that he got Q3, a lot of that by Tom, by the way. I think he heard you, Tom, and that's why they put Carp in Q4. And they put Sham at this Morgan Stanley conference that people really didn't get to see. It was really easy to understand compared to Carp, who was talking very esoterically. But that's why we like Carp at the end of the day. That's why we enjoy listening to Carp. What is the actual retention that Palantir has with contracts? How many are they upping? So Palantir's retention, so their net dollar retention is 143%. That means for every dollar they get into the business, they're able to increase that 143%, which means they call that land and expand, right? They're able to land into, well, that's the term that's used in all SaaS, right? They're able to land and then expand. Hold on. Did Amazon just drop? Did Amazon just fall? Am I tripping? Or am I looking at the wrong Amazon? Amazon was at 2,900. Why does it say 2,600? This has got to be a mistake. Hold on. Let me go to my Robinhood right now. Where is Amazon? This has to be... Oh, yeah. This Webull did an update. I was like, what is going on? Why is that happening? That makes no sense at all. Okay, yeah, that was a Webull thing. All right, that was it. I was so confused. I was like, why is that happening? Tom Nash says your entire existence is thanks to Palantir. Don't throw stones, my guy. First of all, Tom, my entire existence is thanks to you. So I don't know why you're saying throwing stones to me. Amit, I had a video idea for you the other day. Put it in the chat, Samuel. Maybe I missed it. I'm not sure I saw it. 143% net retention. This is everything, Sean. Yep, pretty much. Wrong stock. Could you create a video which looks at the complete overview of all the current clients Palantir has, and you can separate them into different industry sites? Yeah, I think you can go to their IR page and actually see that, Sam. There is a good picture floating around that I'll probably show another day on the live stream that shows all of Palantir's clients. I actually think I have it. I can pull it up. I'll see if I have that, but that it'll show all the different people that they're working with. For Apple, considering that they are making their own CPUs and GPUs now, they will probably enter the Edge AI segment too. It would make great sense for them. Apple is interesting. I mean, Edge AI is not just, Apple would have to do B2B type of sales with Edge AI, kind of like AWS Azure type of sales with cloud compute. I'm not sure if Apple wants to. It would be interesting, right? If Apple makes their own like servers and is like, could you imagine Apple have a product like AWS? Because Apple is one of the best technology companies in the world, right? But they make consumer-facing technology, right? That's the thing what they do, consumer-facing tech. So their GPUs are meant to like make the laptops even better for consumers. If they were to create an AWS type product and Apple had like something pulling in 10, 20 billion in revenue that's just off like compute, that would be insane. Great future videos. Squirt gunfight with Nash in a minute. Yeah, Tom, we got to get into a what do you call it? A squirt gunfight. That would be fun. Okay. I think we are ending up on the end of the stream. Thank you guys for watching. Great stream. Video will be coming out explaining what happened with Palantir Foundry, or with Sham's addressing. So definitely look out for that today. I'll do another video on the inflation and CPI data. We'll be talking about that as well. Hope everyone has a good day. Go kill it. Thursday, almost near the end of the week. Get some goals done. Get some accomplishments done. Make sure you guys have a chance to still succeed in life, because it's only Thursday and we have many days before the weekend. And I will take this advice myself and go do what I need to do to try to make this week a success. Tom, CEO, Weejo CEO, wants to talk to me. You want to co-host the interview? Yeah, I would love that, Tom. Actually, that would be fun. That would actually... Because they reached out to me as well, Tom. They said... Here's the thing, Tom. I don't know if the Weejo CEO wants to do just a bunch of podcasts to be able to get like more airtime. So I think they might want to do me and you, or they might want to do it together. I think if you're talking to the same person I'm talking to from their media department, we could ask to just co-host the interview, because I think that would be more fun than him doing it like with me and him doing it with you. I think that would be better. So yeah, let's I'll DM you on that, because I think if we're talking to the same person, that would actually be way better, because you and me would hit him with the same questions. So there's no reason for him to do like 2 interviews. And I think he would get the same amount of attention if they're looking for, like, you know, to get the word out there more about Weejo. I actually think that makes sense. That makes sense. Okay, cool. Thank you guys for watching. Someone said 2 guys, 1 cup. You guys are funny. Thank you, everyone, for watching. I will see you later in the day with some more videos, and we'll be back later tonight, live streaming, late night talk, stock talks, 11 p.m. I will see you guys there. Thank you, guys. Bye-bye.